Assalamu alaikum everyone. Welcome to my presentation. My name is Arman Hussain Nokib and I am currently studying at Department of Finance at University of Rajshahi. Today I will be presenting an overview of Bangladesh Bank monetary policy focusing on changes during Hasina era. In that era, what was the interest rate trend, what was the inflation trend, what was the credit growth rate and what was the exchange rate. And I will be comparing that with the current government policy stances and the reforms need to strong the financial system. My goal is to break down complex multi-policy issues into clear points. Now, moving on to the present period. The current government has some several multi-policy goals. The current government goals are to stabilize the inflation, bringing it to normal level, to ensure the exchange rate stability, to rebuild the foreign reserve to support sustainable GDP growth. Now, there are some tools used by a central bank to regulate the overall monetary policy of a country. The first one is the policy rates. Policy rate is the interest rate set by a country's central bank to guide borrowing cost in the economy. For example, when the central bank increases the policy rates, banks have to charge higher interest for loans. This makes borrowing more expensive. So people spend less and inflation goes down. It is basically the main price of borrowing money. Second tool is reserve requirements. It is the minimum percentage of customers' deposits that commercial banks must keep with the central bank. If a bank collects 100 taka, for example, in deposit from people, the central bank may say, hey, you must keep 10 taka with me and you can lend out 90 taka remaining. The 10 taka is basically the reserve requirements. The third tool is open market operations. Open market operations means buying and selling government securities by central bank to regulate money supply. For example, if Bangladesh Bank wants to reduce inflation, it may sell government bonds. Bank buy these bonds and give money to the central bank, which reduces the money available for loans. The last tool is exchange rate management. It is the process by which a central bank influences or controls the value of its currency against foreign currency. Now, $1 is equal to 120 taka. Suppose demand for dollars suddenly increases, so the taka will be weak. Bangladesh Bank can use its reserves to supply more dollars and stop the taka from falling too much. Now we will see a graph. This graph is the visual representation of IMF forecast for inflation rates. Before the pandemic, inflation across the world was steady. But after 2022, it suddenly spiked up, squeezing the economies everywhere in the world. And even though it might slowly fall in the coming years, which we are seeing in the graph, we should expect it to stay higher than usual for a while. This is also another graph. In this graph, we are seeing the inflation rate of Bangladesh in several years. In 2024, IMF forecasting rate for developing economy was 7.2%, but in Bangladesh it was 11.6%. So we can easily understand the economic condition of our country comparing it to other developing countries. Now we will see the inflation trend of 2025. In 2025, Bangladesh economy is balancing between high inflation rate of 9.37% and rising GDP growth of average 4.5%, which shows that despite price pressure, the economy is still moving forward. Now we will see the monthly weighted average interest rate. In the time of 2023 and 2024, interest rates increased significantly up as central bank fights for High inflation for people and businesses, this simply means borrowing money has become much more costlier, which will decrease the investment. Domestic credit growth is the total amount of credit provided by the banking sector and other financial institutions to the households and firms. This graph shows a clear story of monetary tightening from a high over 17%. Domestic credit growth has been on a downward trend over a decade. This decline reflects the efforts to control the inflation by the central bank. Now we will see the most important thing, the exchange rate trend. This chart shows the Taka is in under the stress. That big drop in 2025, it basically the dollar is saying, hey, I'm the boss here. And when dollar becomes short, the central bank has no choice but to devalue the Taka. For years, the Taka is slowly losing to the dollar. It is devaluated 77.66% in 2008 to 2025, which means more cost on exports, business struggle, and we will end up paying higher prices at the same time. This is the condition of our country. Now we will see the policy summary of Bangladesh Bank last monetary policy. In that policy summary, the Bangladesh Bank targeted to control the inflation below 6.5% for the financial 2026, and Bangladesh Bank also wants to implement a flexible regime to stabilize the Taka and sustain overall a good percentage of GDP growth. Key development and policy stand. Bangladesh has experienced a notable shift in its economic landscape. Inflation is our main problem. Credit growth in private sector is very low also. Our policy rates are repo is 10%, SLF is 11.5%, SDF is 8%. Now we will navigate the new era of monetary policy. Here we will cover the policy changes, banking reforms, and liquidity management and governance issue. By the end, we will get the picture of how these shifts impact the economy. Significant shifts in monetary policy. From May 2025, Bangladesh moved to fully flexible change rate, meaning the market now decides the value of Taka. Key banking sector reforms. International firms are reviewing bank assets to check their true financial health. The new Bank Resolution Ordinance allows the central bank to step in quickly if a bank is in trouble. Risk-based supervision is also introduced. Strategic liquidity management. To improve liquidity, the central bank reduced the cash reserve ratio to 3.5% to 3%. This puts more money into the banking system, helping loans and growth. Strengthening the governance and non-performing loan management. Enhance governance drive. Special inspections are happening to improve governance and accountability in banks. Non-performing loans. A strong plan is placed to reduce non-performing loans. This includes better monitoring, faster recovery. The key takeaway are all financial system is becoming more adaptive, transparent, and stable. All these steps are about preparing our economy for future challenges. Policy reforms needed. The main policy reforms needed, as I am thinking for our country, is strengthening the banking governance. Second is to improve monetary transmission. Third, tackle non-performing loans aggressively. The external and structural reforms needed are to build a good foreign exchange reserve buffers, to promote financial inclusion and bond market, and enhance transparency and communication. These are the basic things to control and monitor uh, the full economy. The Bangladesh Bank Using these changes can easily control the inflation. Thank you so much for hearing me. I hope you guys understand my presentation, and thank you. That's it.